Hello, good evening, everybody. Welcome to English Tracker Facebook and YouTube channel. And just before we start, can we just do a sound check? If you can hear me, can you just type in yes or something so that I know that you can hear me clearly. All right. Hope you guys had your dinner. And in tonight's topic, actually, we're going to share about how to maximizing returns by diversifying into Singapore stocks. All right. Tonight's session likely to be an hour session, so we'll present some of the key highlights when we do some research on Singapore and some of the reasons that why you should invest in Singapore market. All right. For those you guys are online, if you can hear me, just type in yes, and also do help us to share this live. Share to in your Facebook and YouTube to anybody of your friends that you wish to invest in Singapore market. All right. and tonight objective is just make sure you walk away with something, right? As in knowledge, and skill. Maybe later on we might do have some stock pickings and stock screening, because this is talking about stocks. And all right. All right, thank you, Christine, for the reply. Yes, can hear me loud and clear. All right, let's begin our session. Forgot to introduce myself. My name is Christopher Tan. I'm a research analyst at Equities Tracker Holdings Berhad. And basically, Equities Tracker is a company listed in Bursa Malaysia stock market. And we are a licensed fund manager by Securities Commission of Malaysia. All right. So we are licensed. Okay, before we start, as usual, we have a disclaimer. In tonight's session, we will talk about stocks. By no means as any recommendation. So don't go and buy any of this stock. And basically, you have to consult your own remisier or investment advisor before you make a decision. Yeah, right. Or basically you lose your money, cannot blame us for this slide. All right, just showing you guys some disclaimer. Okay. Okay. So our purpose for tonight actually, normally in Equity Tracker, we help to educate people on how to do investing. All right, how to build your wealth, or maybe you build your wealth first $1,000,000. All right, how you make your first $1,000,000. But normally people will have their jobs, right? Can consider as a single, you have your active income, and also you look at this plan which have two engines, right? And you can consider as this A plan has active income and also passive income like investment income. So what's so important to have two engines? Because normally two engine aircraft are typically faster, and it can carry more passengers or cargos, and can and even safer than a single engine aircraft in terms if the engine fail, right? So in the journey that we want to build our investment income, normally we have some we need to do some form of research, because there's no free lunch in the world. So but entering stock market, we know that stock market is a zero-sum game. So when there's someone losing money, and of course there's someone who make money from the stock market, and and most of the institution guys are more well equipped with knowledge and with a lot of information. But for retail investor, we are generally retail investor are more emotional based. So what I'm trying to do tonight is that we will use data to make our informed investment decision. Okay. Okay, basically there are a few reasons. If you are looking to diversify your portfolio into Singapore, you can look at Singapore stock market. All right, so basically it's SGX, Singapore Stock Exchange. Um, and actually, there are some benefit by diversifying your portfolio into Singapore stock market. First, if if you already people normally say, right, don't put all your eggs in one basket, right? There's a picture shown on the left. People um, are encouraged to diversify. All right. If you are so busy with your with your job and you don't have much time to study on the stock market, it is wise to diversify. But then, in terms of diversification, you can invest in different asset classes like stock, bonds, FD, unit trust, whatever. But then, in terms of the exposure, you you also can, put your eggs in other countries' basket. For example, putting your money into Singapore market. Basically, if you think about it, right, Singapore actually has actually a more stable and actually more developed economy compared to Malaysia. And in terms of GDP per capita, GDP has Singapore has a higher GDP ratio, right? And so has a stronger financial infrastructure and regulatory framework. So that could be the first advantage and benefit to invest in Singapore. And second, if you think about it, in Asia Pacific, actually Singapore is actually currently the financial hub of ASEAN. All right, it's a major financial hub in Asia, attracting international businesses and investors. And this benefit and this advantage alone can actually uh, translate into earnings for investor and also bring a more dynamic stock market. All right. Yeah. And thirdly, it can be looking at it from the currency's perspective, right? So if you look at the history of performance of Singapore dollar, basically Singapore dollar is actually uh, um, is known for its stability, right? If you look at the Singapore dollar versus ringgit Malaysia, we will have some slide to discuss about the currency factor later on. Um, Basically, Singapore dollar actually is quite stable in the region. Um, and this can actually bring benefit to investor because you want to minimize your risk of that currency volatility, right? If you don't want to invest in a country where the currency keep on depreciating and it will eat up all your returns, right? You are return 10% a year, but the currency, depreciate 8% a year, then your real return will only be 2%. Might as well you just invest in FD in Malaysia, right? Yeah. Just give you some ideas on this. Okay, basically, number four, Singapore is also a well-regulated market, right? They are more regulated in terms of the financial market by their um, mass, all right, also their stock exchange. And also, if you think about it, if a well-regulated market, right, it can transform into investor confidence level. So because they are more transparency and integrity of the stock market, and they are less manipulation can be happen in that stock market, and this is what investor were looking for. And number five reason, exposure to different sector. All right, in Malaysia, we are, our Malaysian stock market banks that basically is mostly focused on local banks and plantation. But then looking at Singapore, they are more diversified in terms of their financial sector. There are also other stock, for example, real estate investment trust, REITs, right? And there are also other mining company around the world, and they do have other countries, other company in other countries that list in SGX, and treat SGX as their permission market to list, right, to do their IPO. So they are basically top 5 reasons that you should diversifying your portfolio in Singapore market. Okay, of course, there are also disadvantages or the con sides if you want to diversify into SGX, right? There are a term that by Peter Lynch in his book One Up on Wall Street. There are this term called diversification, right? Worse, even worse off if you want diversify. So that actually if you don't know what you're doing and you don't know what the company is doing, right? You don't know what you're buying into. This could be diversification, right? Not diversification, yeah. Um, but then if you know what you're doing, I think you can avoid some of the uh, capital at risk of your investment. But in terms of the market, overall market, right? What are the risks that you're going to face when you diversifying in SGX, right? Basically, look at the market size. If you think about it, right, you see from the number of players that listed in Singapore Stock Exchange, um, they are relatively smaller player. Uh, for example, in Malaysia, we have about 900 to 1,000 listed company, be it in main market and list X market. But then in Singapore, there are around 640 company that list in their main market, and over 200 over something's company they actually list in catalyst market, which is like our link and to X market. And if you want to diversify, then you ask yourself why Singapore, why not US and China, right? Of course, US and China, there's a lot more companies. You can invest in Magnificent Seven, the FANG stock, and Microsoft, Meta, AMD, Nvidia, whatsoever. But then some of the company actually still prefer to list in SGX, right? Yeah. And the second point, some of the con sides. All right, Singapore actually, their population is less than 6 billion. So and also they do not have they focus on manufacturing and services sector, um, and they are a smaller company, smaller economy, and also the more open economy compared to Malaysia. So as a small and open economy, it may be have more exposure to external factor such as global trade tension, and also some of the regional economic downturns. They also can has an impact on the overall economy performances. Of course, the third risk that cannot eliminated is also the currency risk. But then, if the Singapore dollar is weakening against ringgit, and this will be a risk for you if you have put your money into Sing dollar, all right? But then let's talk more about the currency risk, right? If you look at the previous chart, all right, I bring out these charts. Basically, what I'm trying to show you by in this chart is that the exchange rate between Singapore dollar versus Malaysian ringgit, right? In 2007, the currency is 1 ringgit Malaysia. You can exchange for 0.45 Sing dollar, and actually it continue to be weakened in terms of the Malaysian ringgit. And in this year, we are at the 1 ringgit can only exchange for 0.28 Sing dollars, right? Basically, we are in the new low now in the history. Again, the Singapore dollars. So if the trend continue, having some exposure in Singapore dollar will be good for the investor, right? Basically, you can think about a story. Let's say investor in Malaysia here in 2007, the investor have 10 million ringgit, and if he want to diversify and he puts his 10 million ringgit and exchange into Singapore dollar, and you will get 4.5 million Sing dollar, right, in 2007. And when he stayed in Singapore since 2007, he continued to spend his 4.5 million, and until 2024, he spent about total of from 4.5 million, he spent until 2.8 million, right? Basically, in 17 years, he spent 1.7 million Sing dollar every, he spent 100,000 Sing dollar every year. And after 17 years in 2024, he wished to convert back into Malaysian ringgit, and he used his 2.8 million Sing dollar and convert back into Malaysian ringgit. He will still get 10 million ringgit, right? Basically, he will enjoy, he will enjoy for the 17 years, every year spend 100,000 of Sing dollar, and he still can have equal spending power in Malaysian ringgit, right? This is what it means. Okay. Also, people are saying that reason that by this is a research done by UOB, and is data extracted from World Banks and IMF. What are the reason that contributing to stronger Singapore dollar versus ringgit? If you look at the foreign reserve perspective, right? Singapore actually, although they are a smaller population countries, their foreign reserve actually are much higher compared to in 2023 compared to 1998, right, during the financial crisis. So currently they are the country having 337 billion US dollar of foreign reserve versus 75 billion US dollar in 1998, and it is almost 4 times higher in terms of their foreign reserve. And if you compare against Malaysia, what will be the data be like? Malaysia also increased by almost 4 times, right? And but then in terms of foreign reserve, they are much higher compared to Malaysia, almost 3 times larger. You can consider it as a gunpowder lah, or war chest to defend against any foreign currency as speculator, so they can defend their currency, right? Right. This is what is mean by having a stronger currency. Okay, in terms of the current account perspective, if you look at the current account balances versus the number of percentage of GDP, right? They have actually much higher current account surplus compared to GDP. They have a 16 to 17% of surplus in their current account versus their GDP. Of course, in Malaysia, we in 2023 we also in many years already we have also in the surplus, but in terms of the percentage is GDP, we are smaller compared against our GDP, right? Next, I will actually talk about one of the reasons that people always didn't talk about it and always miss the reason why ringgit is weak, Singapore dollar is strong. If you look at the, of course, if you study economics, you will know that actually money supply of a country can influence a lot of things. For example, can influence in your inflation rate, can have an impact on your currency as well. If you print more money, you will have a weaker currencies, right? You print less, then yeah, you have a stronger currency and lower inflation as well. So if you look at the compound annual growth rate of Singapore dollar, and basically this is their M2 money supply. So since in 90s, right, until recently, the government actually printing at a growth rate, compound annual growth rate of 6.7%, right? They're printing more money every year, of course, but then the growth rate is 6.7% every year. But if you compare against our Malaysia M2 money supply, we are printing more aggressively, right? We are printing at 9% averagely for the past 30 years. Right? If you print more, then of course, in terms of the currency wise, we will have weaker currency and also higher inflation rate. But of course, in Malaysia, our inflation rate are so always managed by the government, right? Because they have a lot of subsidies, all right? Basically, this is one of the reason that Singapore dollar are stronger, right? So we might if over the past 30 years, Singapore dollar is printing as less than 7%, and whereas ringgit is printing at a more than 9% growth rate, it is safer to look at to put some of the asset in the stronger currency, right? Okay, and okay, uh, this is another topic. If you look at the beside currency, so investor might say, hey, might as well I just invest in US, all right, United States. But then if in this is in their S&P 500 from year 2000 to now, and this is okay. It's a very strong uptrend. But basically, if you look at the pattern here, I put the line in the middle is the 20 years average price, and the blue line, the blue area above is actually plus 2 standard deviation from the average, right? Which means uh, this is likely to be 2 times higher than their long-term average. And in the pink color is negative 2 times standard deviation of their long-term average, right? Of course, since 2000, US is in the uptrend, and but then for investor, right, for a value investor itself, you ask yourself, you want to buy high or you want to buy low? Of course, we want to buy low, right? And we want to buy low and sell high. So this could be a very good indicator in terms of timing risk. If you look at the timing of the stock market, right, for US S&P 500, um, if you buy here at average, okay lah, say because you are buying is safe. But then if you are value investor, if it is best to buy at this minus 2 standard deviation, right? And then you make a profit. Basically, you buy low and sell high lah. But then if you look at the current trend from the US perspective, they are at the record high, and also is actually plus 2 standard deviation from the long term average, right? Which is quite, I would say, quite risky if you want to bet, invest in the United States. But then if you look at the Singapore STI index, strict time index, all right, this is also the long term. But then if you look at the trend, right, as a value investor, you want to take exposure when the market is low. And indeed, in Singapore Stock Exchange, they are actually are safer to bet, because you look at it, we are currently at we are below than long-term average, right? This is good because we are buying at discount. So of course, we don't know what the market will go up or go down, but then currently the risk is, like you're looking at the lowest point could be 2,700 points, but the upside could be 4,400. So the risk and reward ratio is very favorable to the investor. So you should look at the Singapore market instead lah. What I'm trying to say is, okay. Okay. Hope you guys can follow me. If you have any questions, feel free to just type it in the comment section below, so that I just can answer any of your questions. All right, just trying to understand more about Singapore stock market, right? If you look at their overall GDP, actually last year, 2023, Singapore registered a overall 1.2% in terms of the growth in their GDP. And actually the last quarter was the best quarter for Singapore economy, because the country actually grow by 2.8% in the fourth quarter of 2023. So overall, the economy actually pick up in the second half from expanding their GDP growth. All right, the output of the countries from last year overall, uh, you know, actually got 3.6% in 2022. Of course, external factor impact them, slow down. Actually, you're looking at from 3.6% to 1.2%, but the country is still growing, right? Due to the weaker first half of 2023. And what is impacting the countries? And look at the goods producing industry. Basically, their manufacturing sectors actually are down quite severely. Um, they are down 3.6% the whole year, right? And but then their construction industry is actually quite bullish and quite strong. Overall, it is growing at high single digit, and in end of fourth quarter in 2022 is actually growing at 10%. Actually very strong. Instead of service sector, of course, the service sector are still growing, um, especially their accommodation and food and services and real estate, like tourism activities, right, accommodation. So the country's tourism sector actually continue to grow 4.6% in 2023. Okay, now we just trying to focus on what are some of the industry that investor might can have a look. And this is not buy or sell recommendation. Just present to you guys some of the research we have done, and then so that you guys have some direction to look and to further drill down what are the companies that actually you guys can look at. All right, can do to further do your homework and do your research. And then you might just wondering why we talk about banks. Why banks? All right. Basically, if you think about it, banks business is very resilient, very stable kind of business. They have a very long term relationship with their client. Once you borrow money from them to buy a house, right, you will continue to pay service your mortgage for the next 20 or 30 years. So it's a very relationship based and very long term kind of business, and it's a very stable earnings. And actually, it is very hard to lose money, right, for banks. And they do have a very wide economic mode because it will banks require license to operate, right? It's all regulated by uh, the the central bank of the country, so they will be um, a very high entry barrier. If a new entity want to set up banks, is not it's almost close to impossible. And banks do have a very good branding and trust has built over the years, and they also have a very large network, right? Okay, so how important are three Singapore banks to Singapore economy and also their stock market? I will have this statistic to show you actually how significant is banks contribute to Singapore stock market. And if you see, Singapore stock market actually represented by their STI, Straight Time Index, and these three banks, DBS, UOB, and OCBC, actually comprises 46% of the Straight Time Index itself. So can you imagine how significant it is if the all three this bank share price up by 10%, actually, right, the STI will up by 4.6%, right? And secondly, these three banks are generated almost 17.9 Sing dollar of net profit in 2022, right? 17.9 billion. And then they have paid more than 50% of their earnings as a dividend. So they pay more than 10 billion Sing dollar to all the shareholders. All right. And anyone invest in banks, right, you will get a very good dividends from the banks. Instead of putting your money into FD, why not just trying to invest in the shares so they get a very good dividends. Okay, this slide actually showing you the global financial central index is research that ranking all the financial institutions in the region. And if you see, New York and London are actually the world top one and two financial hub, right? In North America and Western Europe. But then Singapore actually ranked third in the global financial central index. All right, they have a very very good financial hub. In terms of the ASEAN Pacific region, right? Look at ASEAN Pacific. Singapore also among the top financial hub in ASEAN Pacific, and followed by Hong Kong, Shanghai, Seoul, and Shenzhen. Right. Malaysia not even in the top five list. So yeah, that's why actually Singapore banks are actually very very have a very large network and present in all in overall ASEAN economy. Okay, so the next question will be, which are the largest bank in Southeast Asia by total asset? Right, if you look at the total asset of banks, right, the in Southeast Asia, the top three will be DBS, OCBC, and UOB Bank. And these three banks are actually listed in SGX, Singapore Stock Exchange. And number four is Maybank. Okay, our Malaysian bank is controlled by government. It's a government-linked banks. CMB, they also is a government as a shareholders. Maybank will be PNB and CMB will be Khazanah, right? So and also the next Malaysian bank will be Public Bank, ranked number 10, right, in Malaysia. But then if you look at the overall size of all these total asset of top three Singapore banks, top three banks in Singapore, they have a total asset of US dollar of 1,252 billion, right? Versus Malaysia top three banks is actually 473 billion. All right, just sum up Malaysia, Maybank, CMB, and Public Bank, we have total of 473. We are just less than half of what the Singapore top three banks is. So we are also quite small in terms compared to against DBS. Because DBS alone will actually, their total asset actually is larger than our top three banks in Malaysia already. So what's the benefit of having larger asset size? Basically, you can think about it. They have more customer base. If you have more customer, any of your single customer that going to be default, right, will have a minimal impact to your overall asset and your balance sheet. So the NPL could be a lower NPL ratio, and you have some network effect, and you can have a similar size of your human power to serve more client, so can enjoy certain economy of scale. Yeah. And of course, there are also other banks in like Thailand and Indonesia, Bangkok Bank, Kasikorn Bank, Bank Mandiri, Bank Rakyat, Indonesia. Okay. Right. In terms of the stock code, there are these are the top three banks in Singapore. So actually D05, U11, and 039. And you can just type in the stock code. Okay, in terms of the market cap, right? The market cap of DBS is around 82 billion Singapore dollar. All right. And also OCBC Bank 57 billion and UOB Bank 45 billion of Sing dollar. All right, these are top three banks in Singapore market. Okay, I actually help to summarize all the banks in Singapore in terms of the price to book, PE ratio, dividend yield, earning per share, growth, and also ROE, return on equity of this bank. And I compare against Malaysian bank, Maybank, CMB, and Public Bank. So in terms of the valuation wise, normally all in the industry, analysts would like to use uh, price to book value ratio to value banks, because if you think look at all the asset of banks is actually liquid asset. All the mortgages that you pay, all the loan car loans that you pay are in cash, right? So it's a very liquid asset, and so their book value is actually can be compared against their share price. um, of course, all three banks in Singapore are trading at a premium against their book value, which means you have to pay 40% premium for a $1 asset in DBS, right? And then, of course, this ratio it will be cheaper the better. Currently, there are only one in top six bank in Singapore and Malaysia. Say MB Bank was the lowest in terms of price to book. Yeah, still have a 10% discount in terms of their book value. But then if you look at the P ratio wise, UOB is actually the lowest in terms of the P ratio, right? Lowest in terms of P ratio. And dividend yield, actually they are quite on par for OCBC and Maybank. Maybank have a slightly higher dividend yield for investor, 6.4%. But then compare against OCBC, then 6.2% is quite on par lah. But then you can get a lower price to book and a lower PE ratio. And what about the earnings growth? In terms of earning per share 5 years growth, right? DBS actually have, although they are the most expensive one, but then they are also the strongest in terms of the earning growth. In the last 5 years, they grew their earnings by 13.3%. All right. A year, this one is every year the growth rate is 13.3%. And in terms of ROE, they are also the highest ROE, return on equity. Almost 17% of their return to their equities. Okay, so how to use this data? For example, let's say you are an investor of public bank. So you just compare against DBS and public bank, right? Which one is cheaper in terms of price to book? Look like DBS is cheaper, right? And PE ratio, of course, DBS is lower PE ratio compared to public bank. Dividend yield, DBS again is higher. Earning growth, if they continue, and EPS is also higher. And ROE is also 17% versus 12.7%. It is higher. So in terms of the asset class, I would say in all metrics in the table here, DBS is actually has a better position versus public bank, right? Okay. Okay, the second industry that I'm going to share today is REITs, Real Estate Investment Trust in Singapore. Actually, in Singapore, they have a lot of REITs, and versus Malaysia, we have about less than 20 listed real estate investment trusts, less than 20 REITs. In Singapore, the S-REIT Singapore REITs actually they are the largest REIT market in Asia ex Japan. There are 42 Singapore REITs as of December of 2023. So in terms of the how important and how significant is Singapore REITs to their overall market size is that Singapore REITs actually consists of 12% of the whole market capitalization. Okay, around 100 billion Sing dollar as at end of last year, right? And if you compare against Malaysia, we have only 2.4% of market cap is actually belong to REITs. So you can see the difference between two countries, two stock market, basically. And one of the very similar things for REITs investor is that REITs tend to pay up almost everything of their earnings to their unit holders, right? So they will distribute at least 90% of their specific testable income, right? so that they can enjoy they will be tax exempted, all right, for REITs. So in terms of exposure wise, what will be their portfolio be like look like versus our Malaysian REITs? Actually, Singapore REITs actually have a very good exposure in terms of global real estate investment, and over 90% of the Singapore REITs own properties outside of Singapore. So don't be have a misconcept that saying that if you're buying a Singapore REIT, you are buying in Singapore properties. This is not so true, because it will have 90% of their REITs actually have physical property or asset over the world, right? Basically, if you want to have direct exposure to a lot of very good property in UK, in US or data center, you can have a look at their Singapore REITs. There are a lot of categories of their Singapore REITs versus Malaysia. And what are the subsector of the Singapore REITs? If you look at what are the subsector in Singapore Stock Exchange, is that they have the largest will be the diversified REIT, which means the diversified REITs will involve a mixture of a balanced blend of the asset. For example, it could including industrial, hospital, retail, office in the single REIT, classified as diversified REITs. But then 20% of their REITs, right, out of 42 REITs, 20% of it is actually industrial REITs, involving they own a property and their client is actually they rent it to industrial player like your factory, right? So they classify as industrial REITs. Hospitality REITs. Basically, Singapore is also a tourism hub in the ASEAN. So the demand for hotels in Singapore actually uh, are quite resilient and strong. So in terms of the 13% of their REITs actually in this space are hospitality REITs, like hotels. And of course, 23% are diversified, and 20% are retail REITs, right? Like your shopping malls, shopping complex, right? All those retail REITs. And they're also a business hub. Office REITs actually consist of 15% of the uh, overall size. And there are also other specialized REITs and also healthcare REITs in the sector, right? So basically, if you're bullish on the recovery of the tourism demand in Singapore, you can try to bet, you can try to invest in some of the Singapore hospitality REITs, to tap on the recovery in post COVID-19, right? And also, if you think that the healthcare tourism healthcare will be a boom in the next few years, you can also look at some of the healthcare REITs in Singapore. In terms of the REITs distribution, like basically is a paying dividend to their unit holders. In the dividend yield, office REIT actually has 6 office REIT that pay you 7.1% of the yield to investor, and followed by retail REITs, diversified REITs around 6%, hospitality REITs around 5.9%, industrial REIT 5.6%, specialized REITs 5.4%, and healthcare REITs of 5.1%, right? This is quite on par compared to Malaysia REITs, right? But then you have a lot of choices there lah. You can just compare against every single one, and later on I will show you you all how to use some of the tools that provide to you at absolutely free of charge, so that you can go to do your own research, right? Okay, I'm going to log into sg.agristracker.com. It's a website that done by our team, AgriStracker. We have you can scan this QR code. If you're using your laptop, you can use your handphone to scan this, or you can just using your laptop to type in sg.equitiestracker.com and to search for this website. Okay. Okay, I'm now in actually sg.equitiestracker.com, and you can see and we have a section here. You can have a stocks selectors, and or you have a risk guru. Basically is and you also can search any of company names here in the bar in the search of stock. Okay, so for today's session we just talk about banks, right? For example, if you look at DBS, we just click on DBS and the name will show up, and just click on the company that show up. You will see what will be the overview tab of the DBS Bank, and what is their stock code, the share volume, the PE, the dividend yield, and the market cap, and what is the in terms of price for them compared to 52 weeks high and low. They are now in the low side lah, which means they are in the they might have a investor actually in a good opportunity to look at banks since their price is in the 52 weeks low. And we have a price chart here, and also their dividend payout history. So basically look at 2022, they pay 4 times a year. In 2021, they pay 4 times a year, right? And all this information and their yield, their net profit yield, dividend yield, operating cash flow yield, and their overall financial performance in a graph format, and showing you their net profit trend, their revenue trend, and the operating cash flow trend, right? And there are also similar companies that you have can look into. And there are also other tabs like financials. What are the financial numbers for the past 10 years since 2013 to 2022? What will be their turnover like? What will be the net profit every year? So in terms of the net profit every year, you can look at the numbers. Is that in 2013, DBS Bank is making a 3.6 billion a year, and in 2022, the numbers actually more than double, from 3.6 billion to 8.2 billion Sing dollar. And if the company continue to grow, right, the number could be continue to double in the next 10 years. This is possible, right? The others cash flow statement and also balance sheet figures for the banks. And there are also quarterly comparison of the companies, who are the shareholders. You can look at the shareholding statistics. We also here for listed for you, and their capitals and dividends info, and who are their directors. And this is some of the features. You can consider it as a tool to make your judgment, to do your own research to before entering the market, right? Because we don't want you to just go to work with your hand empty and without any weapons, and you have to fight against all this institution and all the other people out there with they have machine gun. Then you have just bring nothing. Just so our tools here is just to help you. But then you can have a lot of tools. I think this one will be completely for free, so you can just fully utilize our software here. And also, if you are interested to invest in REITs, right, you have this very good function called REITs Guru for the FGX market. And you can select the best REIT for your portfolio to compare against other factors that are within you. So you can look at, let's say, I want to have invest in digital core REITs, and also, okay, say these two REITs, I want to compare against digital core REITs and BHG REITs. You just simply click on select and these two and click on compare. It will show you all the data and what is the year to date returns of the in terms of the share price performance. And what will, okay, let me change another company, and what will be their occupancy rate, right? right? Let's compare again AIM space APAC REITs, right? Because in terms of occupancy, they have a 97% occupancy. Both are quite similar. In terms of performances, right? The property type, one is industrial, one is retail, and there are also dividend yields listed here. So based on the data here, right? Once you have a look, you will see in terms of dividend yield, definitely aims to be more attractive compared to this BSG REITs. And you will also have a lot of information like what's the number of properties they have in the portfolio. Of course, this is 29, this is 6. What is the net lettable area? 8.45 million square feet, and this is 1.94 million square feet. And also the revenue versus the net lettable area. They're also price to book. And what is their gearing ratio? Because gearing is very important for REITs. Because they want to they finance from banks to buy all these properties, and they do have a certain threshold to abide from the regulatory framework. So let's say they cannot have their gearing ratio more than 55%, and they are all quite which means for this company 37.5%, they still have some room to borrow and continue to grow their portfolio, right? You can just simply come here and search for other rates to compare against, right? Let's say commercial trust, okay? This is a diversified rates, and then this is the dividend yield that the company giving, quite similar, quite on par. And you also can you want to know more detail about this rate, right? AIMS APAC. You can just type in AIMS APAC. Okay. And study their result, right? And the performances and the latest dividend every year. We even have this property distribution map for you guys. For example, you can once have a glance, you will know, okay, this company 26% of property, they have 26 property in Singapore, and they also have 2 properties in Australia. In terms of breakdown, right? Okay, this is a very comprehensive tool for you guys, and you can look at the revenue segmentation by geographical area. Okay, I hope you guys can hear me because I look at the screen and showing the connection problem. Okay, that will be my end of my presentation. Yeah, I sincerely hope this tool that our administrator brought to you could be a tools that help you in your investing journey to make your informed investment decision when you're trying to buy a Singapore buy a stock in Singapore market. Of course, back to our presentation slide, we do have other tools as well. Maybe if you have more time in the next few sessions, we're likely to share more some of the interesting feature in our website. For example, rising stars, dividends king, mode defender, cash holder, and continuous hero. This is all fundamentals criteria that you can use as a screener to screen what the company you can look at. For example, what are the companies that have a net profit grown for the last 3 to 5 years, that implying a improved company or industrial performance. All right, which are the companies that are likely to continue to be delivering better result, right, for you guys. So for if you are more keen on the technical analysis wise, you can look at the trading ideas on our website. We have a lot list of tradable stocks, rock bottoms company, uptrend support opportunity and downtrend oversold opportunity, uptrend overbought alerts and downtrend resistance alert. We have plenty of screener for you guys ready. So please feel free to check out our website. If you just spend 30 minutes or 1 hour to play around to learn. If you have any question, just PM us. Go to Equity Tracker website and to ask. If you have any questions, you are welcome to join this Singapore Market Campus. We have a Facebook group in the Facebook. Basically, you can search Singapore Market Campus and then join the group. And there's a list. There's hundreds of investors in the group, and then they basically they can share information. So just search about the group and join. Okay, I will have my last announcement. We'll have a physical session in our AgriStracker office in PJ Symphony Square. Basically, it's a learn and win kind of session. It will be a very fun session, and it will have a lucky draw in every single workshop. And the next session for us, it will be on 27th of January. It's on a Saturday, and we have a lucky draw in each workshop, and we have a multiple prize. Like for example, the first prize we have a giving out of 500 Aeon gift voucher and 500 touch and go top up equal to 1,000 ringgit kind of prizes for our first prize winner every session. So second prize we have a 500 voucher, and third prize we have 100 top up for three winners. So easily we will have 5 winners every workshop. And by the end of the session, end of the 6th session, we have special lucky draw session. A lucky winner will walk away with iPhone 14, right? So I hope you guys are actually can join this session because it's going to be a fun one and also interesting one. Definitely you will walk away with something, be it a knowledge or skill, and also maybe there are also you will be the lucky draw winner. Okay. And my colleagues already shared the link in the comment section. Just trying to click on the link and then join the Facebook group or join the Telegram channel so that you can receive the latest market insight and a lot of information will be out there to share with you guys later on. So we are almost an hour into the session, and I would like to thank you for every one of you guys that stay with us tonight. If you have any questions, we are very happy to answer you. Right. Yeah, and this session, Singapore SGX Learn and Win. Please register before you come and just click on the link that our colleague share. Because we do have need your names in the registration form to participate in the lucky draw session. So do share to your friends and your families. Just come and learn. I think next session on the 27th of January we'll talk about instrument called Daily Leverage Certificate DLC. Right, it's a very interesting tool. If you are interested, and please just come to our Equity Tracker office in PJ Symphony Square, session 13, and come and check it out on 27th January. Okay. All right. I think we we received no questions from the audience, and I would like to thank you once again. If there are no other questions, I would like to call it a day. And thank you for participating. And thank you for your time. And good night.